Good morning, everyone. It's 9 a.m. from the NASDAQ market site in New York City. I'm Brad Smith alongside Shauna Smith. This is Yahoo Finance Live. Here is your morning rundown. Say what? September's jobs report comes in hot, hot, hot. 336,000 jobs were added in the month, way above expectations of 170,000. That's the biggest gain since January, with a strong showing in leisure and hospitality leading the line.
And inflation dealing a blow to denim. Levi's is cutting its annual forecast for the second time after missing sales estimates. Executives blaming a more cautious consumer, hefty promotions, and warm weather.
And cuts keep coming. Tesla slashing prices on some of its EVs. Not great news for the company's margins, which are already at four-year lows. The SEC is also ordering CEO Elon Musk to testify about his Twitter takeover. Heavy is the head that wears the Twitter or the X crown.
Well, the cost-conscious consumers providing conflicting signs for the U.S. economy, with third-quarter earnings from Levi Strauss showing that customers are cutting back on shopping trends, but Lamb Weston proving that they aren't holding back on a side of fries. Lamb Weston, one of the top performers, I think the top performer in the S&P yesterday, both just a bit lower here ahead of the opening bell. But when it comes to Levi's move, off just about 2%, blaming warm weather, blaming the cost-cautious consumer as a reason that they're seeing some of the pressure on their sales as of late. But Brad, this certainly sets up conflicting picture here about the consumer, because on one hand, the consumer obviously has remained very resilient in the face of high inflation, in the face of the fact that there is lots of concern about a recession. They're still out there spending. The fact that pandemic savings levels really coming down from those peak levels, almost erased by some estimates out there just in terms of what that could mean for future spending. Yet the fact that they're still feeling squeezed, they're still going out spending some just a bit. And we certainly are seeing a different picture in terms of what they're spending on and why. And Levi Strauss, at least for now, one of those discretionary items that consumers are opting not to allocate money towards.
You think about some of the different attachment rates that we've been able to discuss over the years. The fry attachment rate, the guacamole attachment rate here, and then even more so if you want to get into currencies, the Big Mac index, but we won't go in that direction. All this, though, considered, it really gives us a picture of where consumers are making micro decisions that have macro impacts here. And what do we mean by that? If the purchase that is a necessity for food, even if you're going out and placing that order on, say, a value menu. A lot of value menus came about during times of economic downturn because it was seen as some type of inflationary hedge, or at least a hedge against spending elsewhere where you might have to pay up a little bit more. And instead, you could go to a McDonald's, a Burger King, or a Yum, or any of the fast food, not retailers, the fast food chains, and say, okay, this is going to give me the most bang for my buck. But at a time where many of those instances are seeing higher either labor costs, higher costs to operate, whether that be in the energy that's taken in from their business. It's a larger cost now that we have to consider for these businesses as well, because that's going to impact their margins. And I think that's where investors are also apt to pay attention in this near-term period.